All right, everyone. Good afternoon, morning for some, evening for others, whatever time you're watching this. We don't know what time you're watching this, but we want to welcome everybody to, again, still the No Name Podcast. I hope that doesn't stick, right? Because I don't know. I hope that doesn't stick. But we've got a full slate for today. Hopefully, you got to watch the last one with our special guest, Jim Barron, and all about his extra dividends strategy and signals. Just a phenomenal track record that he's put together. We'll probably have him back on at some point and go take a deeper dive into that. But that was last week's. This week's, we're going to start off with the market. And then we're going to kind of move into the government shutdown. And then I started saying something last week about insurance that we are going to be looking at a little bit more, and then talking about the insurance stocks, which I think are fascinating. I don't know if you guys have watched insurance stocks at all over the past 5, 10 years, but that is one fascinating sector in what they've been able to do. Insurance is a massively profitable,
Oh yeah.
Yeah.
Oh
massively
yeah.
profitable.
Especially in Florida.
Yeah, no
It's crazy.
question. Then we're going to talk a little bit about insurance stocks, right? I also insure my stock portfolio. I talk about how bad insurance is, and then I turn around and I insure my stock portfolio. We're going to talk about that, and then you're going to mark your dates. December 10th. These guys don't even know. Spring knows, but Ben and Chad don't even know about this yet. So we'll talk about what's going on December 10th. You're going to want to mark your calendars. It's going to be something very special. And then we're going to be talking a little bit about some really cool option scans that we provide. And I'm going to show you guys some option scans. And then next week's podcast, it's a special one because we're going to host not a special guest, but we are going to host and discuss all about Ben's trade of the week. So give it up for Ben. Ben, yay. Yay, Ben. Wow, the excitement here is unreal.
I told Ben earlier
I'm
today.
a man of very few words. I think I think my members even know that.
That makes great for podcast views. So let's get started. We're gonna and I will mention that I did get some great names, and I'm just gonna throw them out here real quick. We're not gonna spend a lot of time on this one, but Market Talk by Real Traders, hosted by Ryan Jones. Market Views by Real Traders. Then Real Traders Viewpoints, and then Market Insights by Real Traders. The No Bull Podcast.
Sounds like a Ben
That's
name.
interesting.
Sounds like Ben came up with that one.
No,
I had a killer one the other day, but nobody wanted to be aboard on it. So,
Got to keep it PG-rated.
It's the No Bull Podcast because we don't talk any garbage, but also because Ryan never chooses a bull market.
That's not true, Spring.
Is Ryan the perma bear? No, I know.
If I actually dealt with that in my live trade session today. That if I were bearish, if I truly were bearish, I would not be long any stocks. I have a stock portfolio.
Right.
I just hedge it. And I guess I'll go ahead and mention this. But my stock portfolio is not doing what the market is doing today. Or the last 2 days or the last 3 days. It's ridiculous. So the No Bull Podcast, the No BS Podcast, we can do that. That'll the No Bull Podcast almost does seem like we're bearish, and I don't want to portray that because I have not been bearish at all. As far as a long term, I should probably say. And then Real Traders podcast. So those are a couple of names. We'll see what happens. And maybe we'll decide something before the end of the year. I don't know.
How about the pitch? In the pitch with Ryan Jones.
In the pits. that don't
I do
even
not want to be
exist.
in his armpits.
Oh,
That is
Lance,
stanky.
are you serious?
Wow, that's just he goes right to the pits, literally. I'm talking
relating what it
option
makes me
pits.
think
Are
of.
you
I'm talking,
now, we just lost half our viewers now, Spring. Thanks.
They don't want to be in your pits either.
Yeah.
Golly, what is jeez. You're awful.
right?
This
I
is-
am a realist.
I blame you though, Ryan. You created it.
Wow. Wow.
Yeah.
Next, we need to talk about the market in
About
deodorant.
how you were adopted?
Right?
I think that's what we need to talk
I don't know.
about.
I
That's
look too
right.
much
Good
like
gracious.
you.
Wow. All right, guys. So anyway, let's talk about the markets
Yeah.
and what's going on. All right, I'm gonna start us off, and I'm gonna give you a fact.
Okay.
All right, I'm gonna give you a stat. In the last 3 days, with markets at all-time highs. All right, so Wednesday we were basically right at all-time highs at the close on Wednesday, and today's Monday. So Thursday, Friday, and not even a full day Monday, because it opened up this morning. In that 3-day period,
Yeah.
the market is up an annualized 200%.
What?
Stupid.
Yeah, yeah,
Is
and
that
we're
right?
at
Wow.
all-time highs. I mean, what are you going to do with that? Is that sustainable?
No,
Is that sustainable?
It doesn't seem
No.
real.
no.
I mean,
Markets need to ebb and flow. And we touched on it when we were chatting on the markets the other day, Ryan. Everyone, in fact, including members of Tao, will often ask, are you still long the market? And no, I actually cashed out a good chunk. In fact, looking at when did I cash out? I actually cashed out roughly around the beginning of October, if not a little bit earlier. And since then, I've been really mainly cash. So yeah, I just don't buy it. It's just I've seen this play out before in the past. Um, Everyone's calling it very similar because the pattern is similar to COVID. If you look at this, that big little drop we
yeah,
had in
yeah,
April and then the recovery, buying that dip, they're looking at it as like a COVID move, and I just don't buy it. I just don't.
yeah,
Especially with the spike up, actually, even today, when you see that kind of momentum pushing it higher, I actually think we might even get a bit of consolidation to a bit of downside here. So we'll see where the week plays out because we have Fed on Wednesday.
Yep.
And that's probably
that is
being
on Wednesday.
priced in as we speak.
And are they going to release the reports this Thursday if the government's still shut down?
Yeah, they're
So they
doing the
are.
Fed reports. Yep, they're expecting a rate cut. And that's just kind of the consensus, but it's the language after, as is always the case, as to what's going to happen. And, whether the Fed cuts, I've said this before too, whether the Fed cuts for the next 3, 4, 5 sessions, it's irrelevant. It's this type of buying, especially in the Qs, man. In the tech sector, it's insane, especially with all the AI movement. It's just not healthy for the overall market. That doesn't mean you sell. It doesn't mean that you go bearish, to the moon. But in this type of environment, if you're trying to go long in a retirement account, it's not a good place to go long. Not at all.
Yeah. Can y'all see my screen?
Yep.
Yeah.
Yeah.
Is that nuts?
It's very
I
nuts.
mean,
Look at that.
look, we're not even, it's not even pretending to try and take profits up here.
I
We just
know.
keep, so
What's so wild is like, July through October, like the seasonal and cyclical tendencies, we're not even typical. I mean, it's just showing impressive resilience. And I mean, I guess that just shows you don't fight the Fed. Um, I don't know, man.
do you
It's some
think it's the Fed, Chad? Do you think that's what it is?
you know,
When's the next rate hike or rate cut?
Wednesday.
Yeah.
It's
Well, the
this
Fed's
Wednesday.
put in the money. They put in a lot of money. Growth's holding. The trend has been like a freight train. Um,
Yeah.
I don't know, man. There's interesting conversations about the Fed out there. And I respect what Ben said about it. Um, I don't know.
Yeah.
Right now they look like somebody you don't want to fight.
Well, it's not even about fighting them because I've been saying that, the market's going to be bullish this year.
Yeah.
And I just got wrong on how. And I mean, so look back here to June, to beginning of
Okay.
June. All right. So
Yep.
we are hovering. We had that big dip in April, right? And so we're hovering here, which is right up here at all-time highs again by the beginning of June, by the end of May, beginning of June. So we're trading right at about 590 in SPY.
Yeah.
And the move between then and now, over the last 4.5 months, almost 5 months, has been at a clip of about 35% annualized return. This is after we bounced back up and got back up to around all-time highs. That's just, and this is during months that are generally known not to be the most bullish,
Right.
right?
Yeah.
Sell in May, go away, right? So it just it's mind-boggling, but that's what the market does.
So what do
I
you
mean,
think
this is
that means? Like, because I mean, this has been probably the last 2 years that we've been talking about, oh, all-time highs, all-time highs.
Oh,
Oh,
man. Well,
all-time
it's been
highs.
more than 2 years. It's been ever
Yeah.
since after, 1 year after the pandemic, we're right back up there. And
So what does that mean for trading and for the market?
it's just,
How you're gonna approach it?
well, I'm not going to approach it any different than I have been approaching it.
Yeah.
Um,
What does it mean for an everyday trader, like someone that like doesn't necessarily have your kind of approach where it doesn't matter what the market's doing?
I mean, to me, I don't see any other way to,
Right.
successfully, consistently navigate.
Right.
I've been doing this for 38 years.
38
Yeah.
years.
And I've had so many times where what the market's doing just doesn't make any sense. And so it's not like you can apply some sort of logic to it. You get guys like, well, I mean, I mentioned this last week, the big short guy.
Mhm.
He was wrong for years. And, he knew it was coming, but I mean, he was going through some pain, waiting it out, and then it came.
So do you think this could be crash soon?
It needs
Or
a
No,
catalyst. It needs a catalyst. Like, if you look back at all market history with anything that has been larger than 10 to 15% on a correction, it needs a catalyst. And that's one of the weird things about the markets, right? You'll hear media push to blame everywhere. It could be political, it could be a whole bunch of things. You go back to 2007, 8, and what have you, and it was the whole banking situation. And there's always a catalyst that will drive the market to fear. And if that catalyst isn't presented, then the market generally is going to just drift higher.
well, this
So,
is not a drift.
right, I know this is,
Right?
and this is what's
This is a
scary.
surge.
Yeah,
So
and
So
that's what's scary.
does the dollar have anything to do with it?
I don't know.
You know,
I don't know. That's a
yeah, actually, you know what? That's interesting that you bring that up. Let me see something here.
I think that there is some of that going on here.
Yeah, yeah. It's interesting. I never thought of that, and
you
there
know.
might actually be something to that.
Let me ask you guys this, and Spring too, if you've got an opinion. So as a whole, valuations are pretty darn elevated on companies. What happens if there's some sort of error? There's not a lot of room for margin of error. And could that cause a slight capitulation?
It would
Well, the
depend on the
market's
company.
That's true. And which brings another whole aspect to this, a whole dynamic to this move, is that my stocks, as a whole,
Yeah.
barely blipped this morning.
Yeah.
We gap open higher. My stocks are barely doing much better than they were Friday. And Friday they were barely doing much better than they were Thursday. And so if you look at it, it's really, they're called mega caps now, right? You got the Googles, you got the Meta. We exited a position in Qualcomm today on the surge. So you've got these massive companies that are driving the index. That's not, I mean, there are other stocks being lifted, but not to this degree. Like if you're not in these small group of sector of stocks, you're not participating in this run. and that's what concerns me, I think, the most
Mhm.
is the undue influence of these mega cap stocks.
Yep.
And if you see
And
those break,
I'll tell you, if you look over the years,
Yeah.
the weighting on these stocks
yes,
has just been just
yeah,
bonkers, and
yeah,
how it's compounded itself to the point where we're kind of seeing it now, where the vast majority of the big players, whether it's Magnificent Seven or whatever you want to call them, especially in the Qs and in the tech sector, they dominate the movement in the overall index.
yeah.
And there's really no other way around it, outside if you want to obviously take part in any kind of market movement, such as what we're seeing the last few days. But that's not a good thing. It really actually isn't. You definitely
I don't
want.
think it is either,
Mhm.
because it leaves most people behind. You know,
Mhm.
we're playing catch up, and at the same time, you don't want to put all your eggs in one basket, right? You don't want to put all your money in Google, Nvidia, Meta, Qualcomm, whatever. And then when they get hit, I mean, you think this is good, it will be twice as bad when they get hit because they will take a hit at some point.
Mhm.
And then they'll probably recover and, keep going just like they always do. But you don't want to see your portfolio take these massive swings. So, it's basically shrugged off. I mean, yeah, Spring, getting back to your question, Spring, how do you play this? And um, you can play long. You can if you don't want to lag behind, you can play the index and you can play the index long. You just have to be prepared for what comes after this. And I don't think,
And when it comes.
most people are horrible at timing. They'll get into this now because well, we've been wrong, we've been wrong, we've been wrong, we've been wrong, we've been wrong. Okay, I surrender. I give up. I'm going to get in, and bam.
Yep.
I mean, you saw it with the run up in GameStop several years ago. I mean, just people got killed because they were buying the stinking stock at $300 a share, and it was trading at 5 a couple of weeks before. And that's exactly what happened. By the way, that was a short squeeze. And the Reddit crowd thought that they would short squeeze the funds that were short. And even the funds, that's part of the reason why the whole thing just skyrocketed, because the funds had to say, I give up, uncle. I cannot afford to hold on to this stock any longer. And that just made things worse. And the stock just shot up. And then when that was over, right back down. It's not going to be that. We're not any kind of, this is not a parabolic move by any long shot of the
Right.
imagination. But it doesn't seem rational that the market doesn't even take a breather. I mean, I thought, the one day that we saw a week and a half ago, 2 weeks ago, I thought we might see at least a few more days playing around down there at that level, and we didn't even see that. So, I'm not going to play anything different. And in fact, in my live trade call this morning, I showed everybody a strategy where you can be neutral, slightly bullish, and very little risk to the upside. And then if the market moves down, you're going to make money. If the market stays the same, you're going to make money. If the market moves up just a little bit, you're going to make money. If it moves up a lot, you'll lose a little bit of money, but you'll make way more if it stays the same. And the market tends to hover. It tends to trickle up back and forth, back and forth, back. It doesn't just move straight up most of the time, which is what we've seen over the last 5 months. So can it last? I hate to say
Defies
it.
logic.
Yes. So,
It will always defy logic.
so this is really interesting. Is it, Ned Davis research? Have you guys read that before? Come across Ned Davis,
Never heard of it.
NDR? Been around since 1980. It's a pretty good um, investment research place where macro fundamental people go. They put out a chart on the Dow around the first Fed rate cuts for like recessions versus non-recessions. And what's really interesting is it says historically Fed rate cuts are not preceded by a recession. that are not preceded by a recession have often displayed dynamics like an early economic cycle recovery. Small cap stocks and interest rate sensitive sectors tend to benefit first and outperform the broader market. So, what that might be saying in a nutshell is that the catalyst and a fuel behind the strengths are in the early cycle of the rate cuts that occur in a non-recessionary environment. So they're super rare when you come across that combination. So they're pontificating and theorizing that maybe it's the rate cuts with a non-recessionary environments, that this is what is the rare and powerful combination. They don't know. But
Yeah.
I thought that was a kind of an interesting point of view, why it's so rare. Possibly, but I'm not an economist. I mean,
Well, there's something else that hasn't been mentioned here, and this is what I
yeah,
thought was going to drive it. You go back to my live trade sessions from last November when
uh-huh,
I said, after Trump was elected, whether you like him or not, whether you agree with the policies or not, whether you have an opinion on tariffs or not, I said, you know what, the market, when the tariffs are implemented, when he takes office and he starts implementing these tariffs, probably going to be some volatility in the market because there's unknown. We haven't really seen this kind of policy being implemented for a long time.
Mhm.
But after that, I think we're going to see the market take off, and that's exactly what happened. And so, we saw the drop in April, and we have not looked back. So, are the tariffs contributing to? Is that part of like a piece of the
Oh,
pie?
that's an interesting thought.
It's a lot of revenue that we're bringing in.
Yeah.
great questions.
And so because of what you said on these other factors,
Yeah,
Chad, which I think is fascinating,
yeah,
add in that tariffs, and I mean, who knows?
Yeah, that's interesting.
This could be a long-term bull market
Hmm.
where it defies logic for a very, very long time. But, to Ben's point, you bring in one catalyst and it can blow it all to poop,
that's it.
right? So,
Exactly.
uh,
I think what drove the complacency with the market moving higher was the fact that there was nothing concrete. Initially, when the tariffs were released, during the
exactly,
infamous, yeah,
exactly.
during that infamous thing, we had that little board out, and he was showing his tariff outline for such and such country. There was nothing concrete that the market could digest. So it literally just said, okay, let's just if it's nothing that's going to hurt us, then it can only be good. So the market just really paid no attention to it and just kept on going. So, if we get something that is, bad news, I guess the way the market would interpret it,
Right.
you're going to see some sort of reaction.
Yeah.
And honestly, I wouldn't be surprised if we even revisited the lows around when the announcement was made, which is about a 30% drop. I mean, it's a heck of a move, but
Oh, somebody's calling a 30% drop.
not just yet. I would say 2026. I really think this year is going to be there's nothing unless
Yeah.
somebody really wants to, throw shade at the holidays, which I don't think anyone's going to be done.
I don't see anything that's going to,
I don't
you
need
know,
a
oth-
screw.
all I'm looking for is some sanity to come in and
Right.
say, hey, we need to just take a breath for a minute.
Absolutely.
And we're not even seeing that. So we'll see. All right, that's a long time we spent on that.
Yeah,
Yeah.
Government shutdown, that also, I mean, what is that? I don't know. Why in the world are we gapping to new highs like that during a government shutdown? It's, interesting, interesting set of facts. But last week I brought up the whole thing about, why are we still shut down? Well, depending on which side you're on, one side is going to say Republicans don't negotiate. The other side is going to say Democrats are wanting to put all these writers on the bills, and there's some truth to both sides of that. But the big shtick is the insurance, and I mentioned this last week. and talked just a little bit about the stats on the insurance. What I want to do is I want to actually show you a chart. I didn't show this chart, did I, last week?
Mm-mm.
Do you remember? I
Of
didn't.
what?
I'm not sure, man.
He didn't.
Of UNH,
Oh, you
the largest healthcare
Mm.
company in the world. And we're going to go back all the way to, let's see, we're going to go back all the way to 1999. And I'm going to share my screen here. We'll go from 1999 to 2024.
Look at that. $5, $6. You got to pick that bad boy up.
Oh, wait till you see this chart. It's going to blow your mind.
$6.
Where? Goodness. I have 6 monitors, and I get lost on which
Blowing out his
monitor is
retinas, guys.
showing.
Just boom.
Right. I've got some blue blockers. I got some blue blockers. All right,
There
let
you
me share
go.
my
Right
screen.
here. Boom.
Let's see here. Whoops. Screens.
Hmm.
5 advanced.
Just in case you wanted to see what I look like without him. There you go.
All right. Here's the screen. Now let me tell you what this is. The blue down here is the performance of SPY since 1999.
Oh, there you go. Just keeping up.
The
Wow.
red up here is UNH since 1999
Insane.
compared to SPY.
Wow.
Yeah, I asked y'all, hey, y'all looking at these insurance stocks at all?
No.
I wish I would have been in 2012.
This is what I'm talking about. If people don't buy in, if they take their $500 and put it into a group of insurance stocks, by 10, 12, 15 years down the road, you're based on this. All right. Now, I'm not saying it's going to continue at this rate. I'm not saying that it's even going to be profitable. I'm saying that over the last 10, 15 years, if you would have stuck $500 a month into one of these stocks and let it sit as opposed to paying for health insurance, you would now have approximately $500,000, and the dividends alone would pay for 3 health insurance monthly payments every month.
Wow.
So that means that you could actually buy a health insurance policy later on in life. Now, depending on how old you are, this is not going to be something that you probably want to look into, but it just boggles my mind that young people pay so much for health insurance when there's other ways of going about it. And yeah, you are taking a risk, right? I don't want to diminish that. I don't want to say there's no risk in not having health insurance,
Right.
but there's a guaranteed risk when you pay for health insurance, right? You're guaranteed losing money every single month, and deductibles, right? So this is the 2024. There's a reason I showed UNH on this example. Anybody looked at this chart recently?
Not of UNH, no.
Not of UNH.
Yeah. It's been all
So
pretty bad for a while.
so here's the chart of UNH. We went from 625 down to 225. And now we're back up to 365
Yeah, I
in a
saw.
matter
What
of
was it? What
months.
drove that?
I forget
Yeah.
what happened with that. But this, and we bought it down here.
Oh, nice.
This is a tremendous long-term investment, because all they're going to do is they're going to keep pushing the health insurance deal. The more they push it, the more these stocks are going to go. The stronger these stocks are going to be. And you can see that based on this chart. And if you look at the percentage, and I'm just throwing out stats, well, you can do with it what you may. But you look back here to 2010, Most of this growth is since 2010. What happened in 2010?
That was
Anybody?
just after that was just after the whole debacle with the market. So
That
That
Housing
was just
crash.
after the debacle.
yeah.
Mhm.
Oh,
But
was it a bump
Oh,
there?
9/11
it was the
happened right after
beginning.
2010.
No, that was 2001, silly.
Right, that was a while ago. There you go, just showing your age, huh?
Well,
There it is.
Oh my goodness.
Yeah.
Was that
That
Obamacare?
was dumb.
Obamacare.
It was.
Okay.
Obamacare. I
Yeah.
think started in 2012.
Yep. Yeah.
And look at the growth. There is a direct correlation to the number of people insured and the why am I getting these stupid ads on here?
Just click the X.
I don't want to
Don't
click
do
the
that.
ad for crying out
Not the
loud.
X.
Oh, there
Oh,
it
I'll
is.
show you a way to block those, Ryan. I'll
Oh,
show you.
please do.
I'll show you.
So there's a direct correlation with percentage of people that are insured and the performance of these stocks. I'm going to show you one other. Okay. Anybody have anything else that they would think they might do well? Speaking
Mhm.
of how many people are on insurance, there's a correlation of how many people are on insurance and the strength of this type of insurance. What other type of insurance is there that's mandatory?
Car
Auto.
insurance,
Car insurance.
Yeah,
home
correct.
Yeah.
insurance.
Car insurance. So we're going to go PGR.
Yeah, that one's a killer.
Good
Oh,
old
I was gonna
All
say,
right.
progressive.
Now we're going to go. This is only the last few days. Here we go. Look at this. It's not as much as UNH, and Progressive is also taking a hit. So we can, if we just kind of look at
Interesting.
up to 224, right?
Actually, where is
2024.
that trading right now? PGR.
I'll put that screen up here too.
Yeah.
But this one again, 5,500%. UNH, by the way, was 12,000%
Right.
over 500%, and or 600%. And this one's at 55. So this is like almost 10 times greater performance. But you see kind of a similar trajectory here. But it's if you this stupid ad thing, right? It hasn't always, just
Mm.
completely outperformed the market, but it has been stronger than the market most of the time. And then you see the divergence where it just goes ballistic and almost parabolic. But I'll pull up PGR here. So long story short is, these are great stocks, long-term stocks to buy significant dips, which is exactly what we just did. We just bought PGR down here around, I think we got filled 226 or no, 220. I forget where we got filled. But we just bought down here and it has dropped from about 290 to 220. It's a pretty decent dip. Look at,
Yeah.
I mean, this is an insane growth rate. But this is what I'm talking about as far as a breather, right? We just there's nothing driving any reason why over the last June, when the market has been going ballistic, June, July, August, September, and now October, PGR has been down, 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 down. But it's one of the best stocks out there. So
I'm wondering though if this is also tied to because obviously Progressive, um, if I'm not mistaken, also issues a good chunk of their stuff through homeowners insurance. And if we're looking at the automobile industry, which took a bit of a breather, actually even currently, homeowners insurance, however, the real estate market has been a little back and forth the last, I'd say about a year, but even before that, we had a big pop, in house values increasing, insurance premiums are going to increase. It's just the way it is. So I'm wondering how much of this has to do with the housing market.
mm, that would be, yeah, that would be interesting. An interesting correlation because I don't think the housing market hasn't dropped
No,
25%,
not at all.
right? But this stock has dropped 25%
Not from, yeah, I'm talking even
from the
before that.
highs.
this
Right.
whole run up.
Yeah, yeah,
Yeah,
yeah.
prior to that, yeah,
Yeah.
that whole leading up to this whole run up, I think was actually mirroring the housing market more than anything else.
Yeah.
Because we saw a big bump in the housing market about 3 years ago.
Right.
And that's
So
that's also kind of around where it took its little parabolic move here.
yeah, so if we start in 2018, obviously the housing market since 2018 is not up 500%.
Right,
So
right.
I think that maybe there's an exponential effect there that when the housing market does well, then you have like a 3, 4, 5-fold effect on the insurance stocks. I don't know. Maybe that might be an interesting correlation to kind of wield out at some point.
Well, all they do is going to increase your rate. You know, the value of your home goes up, the value of your land goes up. They're going to send you a new bill, and
Yeah,
that's going to be the
yeah,
assessed value. And it's a good business to be in, if you ask me.
yeah, yeah, yeah. We don't have time to talk about this today, but I'll tell you what, uh you're sitting pretty good, Ben. They out there in Florida.
Right.
If they get rid of the property taxes on residential
Man,
properties.
you know, from your mouth to God's ears, hopefully it'll happen. But it's kind of wishful thinking, I think, honestly. It would be nice though. But the way I see it is if they do happen to get rid of that, they're gonna find another way to tax you. They just won't call it that.
Oh yeah, they absolutely will. They have to get the revenue from somewhere, but
Right.
it ain't, the property taxes, like they've already said, from what I can tell, um, it's not going to count on like rental property. So if you got like an Airbnb or some rental properties,
Right.
you're still going to be paying property taxes on those.
Mhm.
So, it's not absolute, but I do think that property values are going to soar. I think people are going to show. And besides that, you got people from New York coming down there.
Yep.
And who knows if this new potential mayor comes in and drives people out with the tax burden. I don't know. That's for another day. We're not going to tackle that one today because that's
No.
that one is
It's a bit deep.
it's a bit deep and it's got a lot of different tentacles going everywhere that you'd have
It
to
does. It
kind of
does.
cover. But having looking at these insurance stocks, you know, insurance is a profitable business, and I insure my stock portfolio, which means that I'm paying a premium against a severe market crash. What do y'all think about that? Is that y'all agree with that or you don't?
Hedging your portfolio?
Yeah,
Why
yeah.
wouldn't
Absolutely.
you agree with it?
You have to. You have to. You
Because
have
I
to.
just showed you where insurance is a
You're
losing
right.
business. That's why
Right.
that's
Yeah.
so why would you want to?
Your
Hedge
tail
your
your tail
portfolio.
risk your tail risk comes on things you can't predict, right? So the market, as we were talking about, a catalytic event where the market doesn't like what it hears, and you're hanging out at your job doing your thing, and all of a sudden you look at your portfolio, you're down 10% in one day. You're like, oh, what's going on here? If you were hedged, you'd still be down because obviously you still don't want to cap your upside, but the bleeding will be considerably less, and it's better mentally to know
Mentally.
that you have a way out, I guess.
Well, and like what we said before, the market's not logical. So if the market's not logical, we know that it can be crazy. It'll do whatever it wants, whenever it wants. So that is less data that to base your choice off of compared to, oh, look, the insurance business is like you can look at, oh, I was doing research on how many people have to end up paying more than what they pay towards their insurance per year. And most young people pay more towards health insurance versus the health insurance actually helping them because the majority of people that actually utilize health insurance are above age 45. So anyone in the young sector is paying so much for that insurance when they don't actually need it. But
Yeah.
to me, you're looking at something solid that you can identify where the risks are versus where they're not in the market. I don't know if you can identify where your risks are because it defies logic so many times.
Defies
And
logic.
yeah.
But at the same time, what is the purpose of a young person getting health insurance? It's to
The what if?
insure against the what if,
Mhm.
the accident, the sickness, the cancer, the, whatever. And so they going to Ben's point, it's a mental thing.
Mm-hmm. But statistically speaking, if we're talking logically,
Speaking, you are absolutely
yeah, it doesn't make
better
sense.
off not paying. I mean, statistically speaking, you're going to be better off, right? There are going to
Right.
be some that are not.
Yeah.
Right.
Well, and I like how you give a different. You don't just say don't have health insurance. You say if you just put that somewhere else and make it work for you, rather than just throwing it into the money pool of insurance,
Right.
then you actually do have insurance. It's just not the standard typical insurance.
All right. So this is where we might go into some other weeds. Some of y'all know, some of you don't. I have a bit of a legal background before I became full-time. And so I got to experience a lot of different stuff going on with regard to accidents and
Mm.
health insurance and whatnot. And I'm going to tell you right now that a little secret in the industry, if you don't have health insurance and something happens to you, they're not going to put you in jail if you can't pay. You will end up making a monthly payment, and it will probably be less than what you paid for the health insurance.
Yeah.
Now, they're going to have, it's going to look bad on your credit.
Only if it goes to collections.
Only if it goes to collections.
Mhm.
But it's going to show, you have a horrible $1 million issue. They're going to give you a discount. And I did this all the time. You say, hey, this is the situation. And I had some horrific situations, like just like things you can't even fathom of what happened to these people.
Mm.
And they had just massive hospital bills. And I would call them up and I would say, hey, listen, we're about to settle. And this settlement is going to require you to take 20 cents on the dollar. And if you will take 20 cents on the dollar, then that will free our clients to settle, and you'll get paid, immediately. And they will take it.
Mhm.
They absolutely will take it. And if you can't pay it, and they know you can't pay it, they will take payments, and then they will sell your debt to somebody else,
Right.
and you'll just be making payments to them, and it'll usually be less. So it's even if something does happen, it's not the end of your world, right? Financially speaking. So there are ways, I don't want to push people to that. I'm just giving you facts. I'm not giving advice. I'm not even making a suggestion. I'm just, telling you stuff that's out there. And everybody's got to make a decision for themselves. But going back to stocks, what's the difference between insuring my health versus insuring my retirement?
I would argue you
Right?
insure your health with your investments.
Okay, well, I can insure my retirement with my investments.
Exactly. But you're doing it a smart way, right? Everyone has a type of hedge. Like
That's
you
the
talk about
key.
the wrong kind of hedge.
That's the key. You hit on it. Keep going.
Yeah.
Go on, you
Okay.
hit on
Like, I mean, I've read lots of your stuff. So you always talk about, oh, the gold is the standard of a hedge. And even when you show what it does in a stock market crash, you still lose a bunch of money with gold. You just lose less money than the whole crash. But your goal with a hedge is to make money. Like if the stock market crashes, why settle for losing all of your money or losing less money? You want to might as well make money while you're trying to do something.
If you can, right?
If you can, yeah.
Yeah, if you can. So here's the thing, the caveat with hedging is you have to know what actually hedges. And if you can do a quick Google search and you'll get all sorts of stuff. People even say, well, market's up right now, all-time highs. The risk is pretty high that we're going to see a retracement. Time to get into cash, right? So Ben's in cash. That's not a hedge,
No, it's not.
right? you're in cash. And if the
Right.
dollar keeps going down, your cash
Well,
is dwindling.
well, my cash is still in metals. So
Okay, so
that's been doing. I mean, yeah. And when yeah, actually, let's mention that. You never want to be strictly in cash,
Right.
guys. You
right.
never just want to be sitting in cash.
Absolutely.
That's a
Absolutely.
big no-no. Actually, believe it or not, which is odd, we'll probably get into it in another podcast. But I've been carrying a lot of crypto as well, which has been doing well. And it's weird because crypto was turned into a bit of a safe haven, which is weird to think of in terms of Bitcoin being, a safe haven for the dollar. It's crazy, but yeah, I know it's you never want to be strictly in cash. Absolutely not. So
Yeah.
I'll,
Yeah.
I'll,
Can
I'll
Question.
yeah.
mm,
So why don't you want to be
inflation.
strictly in cash? Like
Inflation,
explain it.
yeah.
You lose it by the
You lose
devaluation of the dollar.
every month. Boom.
The value of the dollar is going down, and your spending power decreases. If you have
Right.
$10,000 in cash, you sock it away under your bed, and in 10 years, that's going to be worth about 5,000 in spending
Right. So you're
power.
basically letting it get you're not letting your money work for you. You're actually letting
Yeah.
it just dwindle away
Yeah.
slowly.
Yeah.
Right.
And
And
that's
actually,
not that's
Exactly
not a
right.
winning.
the speculative portion of my portfolio, which would be things like Tau, is usually around 15-20%. That's still active, and that actually will still keep you positive, net positive, over the market, generating that alpha, so to speak.
Yeah.
Mhm.
Yeah, you never if you're going to take all of your cash and stick it in cash and just have it doing nothing and laying dormant, that is the worst thing you can do for your money.
Yep.
Absolutely, any
Yep.
day of the week, even longer than a month, and you're just losing
You
money.
you have to have your money working for you. The problem, though, is that you put your money to work for you, and then it doesn't work for you.
Right.
Right? Whatever you're doing doesn't work out. I put my money in this group of stocks. The market's up, 200% annualized return over the last 3 days. My group of stocks is not up an annualized 200% over the last 3 days. Right? So it's not working for me in the same way. And then we turn around. I promise you, if SPY crashes tomorrow for whatever reason, some catalyst if SPY crashes, it's bringing my portfolio down.
Yeah, right.
Right? I'm not
Right.
gonna. So, so it's kind of a catch-22
It is.
from from that standpoint. But
Mm.
the thing about insurance is, I go back to the example earlier where I said if you put your money in, 10, 15 years ago into UNH and let it sit
Yeah.
and it grows to 500,000 today, that 500,000 now pays for your insurance. So I have no issue. Buy insurance if you've got a way to pay for it. If you
Mhm.
don't have a way to pay for it, it's another thing. Because if I just do insurance, if I just insure my portfolio the proper way where it's fully insured, and if a crash happens, not only might I not lose money net, I actually might gain money net. It's not guaranteed, but I am guaranteed to offset most of the losses, period, because it is a direct correlation to the way that I hedge. But that hedge costs me about 8% a year
Mhm.
if stocks are up. So I have to overcome that cost. And if you can't overcome that cost, then it may not be worth hedging. Right. So so I encourage people to hedge if you can pay for it somehow. And
That's well
that
stated. That's a well
that
stated comment.
is what I'm going to be dealing with in a hedging webinar this Thursday. How you like that for a plug?
Dang, look at that transition. Transitions, guys. Learn the transition.
This Thursday, 4 o'clock Eastern, I am having a hedging webinar where you're going to learn all about that. You're going to actually, what happens is you sign up for the hedging webinar on Thursday. We give you my original hedging video, which goes into all this that we've been discussing, and about all the different hedges that the market, all the different market gurus talk about that are actually not hedges at all. And then we talk about the only real hedge, and then why you have to pay for it. And I go into ways of paying for it. So you'll have a link. We'll put a link right, Spring? When we post this,
In the
and
description.
they can sign up for the hedging video. It's like $97.
Yep.
It's worth every penny. So pop in there and grab that. And that kind of leads me into the next session or the next topic. And I know we're probably, where are we at? Like 45 minutes in?
Yep.
I think we're right on time. And that is December 10th. It's a Wednesday. Mark your calendars. This is the first time that I've done this type of workshop. It's a 1-day option workshop for anyone, beginners, intermediate, extensively experienced. You're going to come away from this work. I'm going to give you about a dozen different types of trades in options that you can use, low risk trades in options that you can use during 2026 for all sorts of outcomes, benefits, for account growth, for paying for a hedge, for taking advantage of bull markets, bear markets, neutral markets, income generating. It's going to be a chock full day of geeking out on option strategies, and we're not going to get too complex. There'll be a few complex scenarios in there, but we're not going to be too complex. And we're going to start the day and we're going to set the foundation, and then we're going to build on that foundation. And it's going to be a must attend option 1-day workshop. And we're not charging a whole lot for it. All day,
No.
you're not going to find this information anywhere else, and we're only charging $297 for that full day. So mark your calendars, December 10th. Ben and Chad didn't even know about it before the podcast today. We came up with it last week, decided, based on looking at all the needs out there, that this is something that we needed to do. And so we're going to do it December 10th. And we're going to set your 2026 up to be, this is the goal, that you have the best performing year in 2026, no matter what the markets do. And that's really where I focus most of my attention, is performing whether the markets move up or not. That doesn't always work out, exactly that way. Like this month, I actually might have a net negative month this month because my stocks, which are my bullish side, are not performing alongside the S&P. My hedges are costing me money, and the strategies that I'm using the hedges aren't keeping up. And so the three combined, I might actually lose money this month, but it's a rare month for this combination. Very rare month. And it's going to be ever so slight. Like it's not even going to be a blip on the screen. So it's not like it's 100%. There is nothing that's 100%. There's nothing that goes up 100% of the time.
If you find that, let us know, because I mean,
And, I mean, there's stuff that goes up consistently, but you'll hit a set of market conditions and circumstances where it stops. I mean, so strategies, y'all remember, this is going back, guys, super charts, system writer. Y'all don't?
This
No.
outdates
Different
me.
charts.
Wow.
Unless I know it
Oh.
by a different name.
Was I even born?
It was the precursor to TradeStation.
Yeah.
System
Oh,
writer.
Is it
okay.
Omega something
Yeah.
behind it?
Omega. Yes.
Yeah.
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 The Cruz
The
brothers.
crew, yeah.
Yeah, they were in Plantation, Chad.
Yeah.
Yeah. So, when Chad used to live in Plantation. I used to live in Plantation. Back when TradeStation was at TradeStation, it was Omega. And they had System Writer, and then that came out with Super Charts, and then TradeStation was the intraday version of all of that stuff. And I'd go into the office, and I actually used to write articles for their magazine, their System Trading Magazine. So there would be these systems. I don't want to get off too much on that, but there would be these systems that people are writing, they test, and they, show the performance results, and then they wouldn't work moving forward.
Hmm.
And sometimes it's because of the optimization and your data fitting, right? But even the ones that weren't data fit, you got to understand that there is a set of circumstances that is favorable to all strategies, and then there is a set of circumstances that is unfavorable to all strategies to varying degrees. And a lot of people will look at a strategy and they'll say, okay, here's a strategy, I'm trading it, it's worked for the last year, and all of a sudden, for 2 months in a row, I haven't made money. Well, that is not necessarily because the strategy stopped working. It might be because the conditions that are necessary for the strategy to work aren't there anymore. The conditions have changed, the circumstances have changed. And so, you just in order to be able to trade through those, which right now, for example, in October, I might be negative. I might end the month negative. We'll see what happens over the next few days. We've got till Friday, right? I might actually end the month negative, but I'm not changing a thing that I do because I know over time it's going to work out. And the risk when it doesn't work out is so small. I mean, it's not going to be because I'm hedged, right? So anyway, all stuff that we'll kind of also touch on when we get to the 1-day workshop. Y'all are going to attend, right?
I have to,
Of
but I would
course.
want to
We
anyway.
just found out about it.
Yeah.
No, these are my favorite. I learned the most from the workshops. Like the benefit, Ben started his trade of the week because he sat through an in-person workshop and he didn't have me to chat to the whole time that time. And so he thought, oh, I might as well learn. Since I have to sit here all day, I might as well learn. And now he's an expert in anything cash flow because he sat through your workshop. It is the most informative, all of your workshops, because it sits you down and focuses you on the whole picture. And like you have a lot of intelligence and experience that you've learned over 38 years, and it's hard to get it all in one piece. And so when you do the workshops, it's amazing. It's the most compact, full learning place you can be to learn your strategies. And that's what's helped me learn is your workshops.
Spoken by a true unbiased critic.
I am, because I'm pretty critical of you. So
That is a true statement.
would you look at that face?
Oh, wow. Between my armpits and my face now, I just like,
Right.
And I'm just a carbon copy.
brutal. You are brutal. All right. So some of the strategies, we're going to be going over these strategies, but I want to show you guys something. I think you guys already know about this. We just haven't made it available as a subscription document yet. So I need to show my screen again. So hang on 1 second while I figure that out. There we go. So there are scans that we provide, and we're going to be providing more and more of these scans. We're not providing login access to this site just yet. Before the end of the year, that's the goal, is to provide everybody login access to this site so you can access some of these scans. But some of the strategies that we're going to be going over in this 1-day workshop is going to be touching on some of these scans. And the workshop is $297. If you want to upgrade, there's going to be the ability to upgrade and you can get access to these scans. But I just want to show you a couple of things here. One of the things, and this is one of the more, how should I say it, complex strategies, but I am going to be briefly discussing it during the workshop. It is not one of the main focuses because it is more complex. We're going to focus on strategies that are more simple to implement. And you can get those implemented like immediately. And we're going to help you implement them, partly because of these scans. We're going to help you implement them so that during 2026, you can start off trading a couple of these strategies and then continue your learning process. And the more you learn, the more you are comfortable with some of these other income producing, I'll call them income producing machines, because that's what a lot of these are. You'll be able to implement some of these on a greater basis. So I'm going to show you one thing, and I know we're probably going to get into the weeds a little bit on here, and I don't want to spend a lot of time. I mean, I can't believe we've almost hit the hour, but I'm going to at least show
We've
you.
already hit the hour.
Have we really?
Yep.
That's insane.
By a couple minutes.
That's insane. All right, so this is an option sanity scan. I have so far I have got cash cow, which is going to be one of the first strategies that you learn in the workshop, and I'm going to be going over examples and whatnot, and then we're going to be talking about cash flow covered calls, and then we're going to be talking about some other strategies that I don't even have on here and I haven't touched in probably 10 years. And I'm going to reintroduce those because they are still just tremendous, tremendous little strategies that anybody can implement. But I'm going to give you the foundation, really, behind all of this, and that's really what's the key is the foundation. But this is one of the strategies that I use to help pay for my hedges, and just to kind of show you what this means. I'm going to bring up what I call have I on any of these podcasts yet brought up the spread matrix, the option spread matrix?
No.
I haven't.
So
All right. So this will be the first time that you see these, and we really do, do we have a video on the matrix for
Yeah,
Trade
so
Partner?
oh yeah, there's a brief overview on the tutorial section in Trade Partner in how to read the matrix, on a basic level. Obviously, training your eyes and training how to do the process. It's going to be a repeated action that you guys would have to go through over time, but it's worth it when you learn how to read the matrix. Even just on a basic level, it changes on how you enter your trades. So it's interesting.
All right, so we need to make sure that we post that link. What is today, the 27th? We need to make sure that we post that link at the bottom of this when we post the podcast for this week as well. All right, so I'm pulling this up. I thought I had it, but I lost it in one of my one of my 6 screens. All right, 669. Oops. Shoot, wrong one. That's all right. I can make the adjustment real quick. 674. All right, I'm going to pull this over and I'm going to show you exactly what this is and what it does and why I love it so much. These are all credits, first of all. These are 10-point, these are called reverse Twin Peaks, option insanity, reverse Twin Peaks. Every single one here is considered that. So it's just a matter of where they are from a strike standpoint. And you're not going to find this stuff anywhere else. So this is going to be like brand new. If you stumbled upon the podcast, if you've never seen my option trading stuff, I don't rehash anything out there. I think everybody can pretty much, you can read all the option books you want. You're not going to see any of this stuff in there, because I do it differently. So with this, these are credits. And I'm going to show you what's called an option matrix. And I got the date wrong on here, so hang on while I fix that. There we go. And I'm going to pull this over. All right, so here is the spread. This is the scan, one of the trades from the scan. And I just need to put in the range that I want to look at. So I'm going to go 660. Where are we trading at? 685? I'm going to go higher than that. I'm going to go 670. Whoops. Doing this live. Wonderful. 690. And I don't have my strong glasses on, so I can barely see what I'm doing.
He has
He
like
actually
20 pairs
wears-
of glasses, folks.
I
Letting you
do.
know.
No,
I
I
do.
have taken pictures of
Hush,
him
Spring,
because he
Spring.
has like
They
double
know enough
glasses.
about me.
He does 2 pairs of glasses, so he's not just 4 eyes, he's 6 eyes. Because he has to go through 2 different sets of lenses to see.
Spring, you're fired.
Hey, no,
I was good knowing you,
I'm
Spring.
just sharing because others might relate.
Okay, sure, great. All right,
Sorry,
this is
he blessed me with
SPX.
great eyes.
This is SPX. Oh, it's coming.
I know.
It is
I'm gonna
coming.
get it so bad because I make fun of you.
Right? Yeah, probably. And these are all credits, right? You see credits here. What a credit means, because these are all calls, what a credit means is that if the market moves down, if it crashes, this is a 785 credit in SPX. That means I'm going to make 785 bucks if the market crashes. Now, this is the spread that expires today. This is the same exact spread that expires in 2 days. All right. And I want you to notice if the same exact spread expires in 2 days and the market goes nowhere, that's what this represents. So we're just going to move it straight across. If the market goes nowhere in 2 days, that same spread today that I can get right now for a 785 credit today is worth 2175. That is a $3,000 gain in 2 days with the market going nowhere. All right. Now, then you have, okay, well, what's the risk? Well, the risk is based on to the upside. And this is a 785 credit. And if it goes up, you see it goes to a 10 credit, 11 credit, maybe a 12 credit, and then it starts dropping off again. But by the time you get to the day of expiration, what is this? 350, 350, 535. Now, it's probably going to be a little bit bigger than this one, and I'm not going to go into reasons why. But my point is that your risk is extremely limited to the upside. But if the market stays the same, right, you might lose in this 500, let's say 500 bucks. Be real liberal on this. And you're risking 500 bucks. If the market moves up, how far? 1, 2, 3, 4, 5, about 5 points. Let's say you're breaking even at about 5 points, and then the risk is maybe up a little bit more than that. But if the market stays the same, look at this. In this range, you're at debits. It's $3,000 in potential, I should say, in 2 days. Now, again, I don't think it's going to be quite that much for this particular one. I think it will be for this one, and I think it will be for this one. And I can go out even further in time. But my point being is that there are ways to create income that boggle the mind based on a risk reward basis. You're not going to be right all the time. Sometimes, like this week, I placed on a couple of these trades, and guess what? I'm losing a couple of $100 on these trades because the market over the last 3 days has skyrocketed 15 points, well into my risk zone. But most of the time, when the market, how many times can this stay the same and I make $3,000? How many losses can I pay for? How many times can it be wrong in that scenario? 6 times, 7 times, by assuming that I suffer the max risk, and that doesn't happen all the time. And then if the market moves down, you're going to make most of the credit, if not more than the credit. So this represents if the market moves down, what this price is projected to be if the market moves down or stays the same or moves up. That's the matrix. You won't see this matrix anywhere else. TradePartner is free to get these matrices and to apply them. They are absolute game changers. I don't charge anything to access the ability to put these matrices together. So you should go to tradepartner.io. Going to have to click that link in there too, Spring. TradePartner.io. Sign up for a free version of the account. You'll be able to put these matrices together. Learn about them. They are absolute game changers with regard to understanding how option spreads work and being able to analyze current opportunities, no matter what the option spread is. This is just one of my option spreads. You can create a matrix for any option spread you want and get the same data, and it's absolutely tremendously valuable. In fact, guys that come in here and they do this and they learn And it's not difficult. It's just different than what you see out in the world, out in the trading world. And so once you learn it, they'll tell you they'll never go back. They'll never go back to any other analysis platform. This one, and I shouldn't say they won't access or look at any other analysis, but this one is their go-to. They will say again and again and again, this is their go-to,
Yeah.
because it gives you a big picture. So, and these are actual prices. These are not projections. Like you can pull this up, you get a projection, and the projection it may or may not be right, for various reasons that I'll touch on during the one-day workshop, which are actually quite important. But these are based on actual prices, so it gets a little bit better of a projection than just using, let's say, like the Black-Scholes model especially on indexes. All right. So I wanted to briefly touch on the scans that we provide in relation to the workshop that's coming up on December 10th. You use the matrix at all, Ben?
All the time.
All the time.
If
All the
if
time.
I can chime in as a
Here's the interesting thing about it, guys. So I know a lot of you would probably come from a background where you learn, basic strategies like a vertical and that sort of thing. And you could even pull up, to an extent, some information of how a spread's going to look. The problem is that most brokerage platforms don't really give you the flexibility to look at a spread, how it could possibly perform. For example, like you're looking at right now is at the close. Right? Actually, what time? Yes, yeah, right at the close.
Yeah.
So what you're seeing there, in terms of how that particular spread could possibly perform, you're not going to find that on a broker platform. You're just not. So I had to train my eyes to look at this, and it did take me a little bit, because you're not used to it. So, if you dive into trying to learn how to read the matrix, it's going to take some time. Give yourself some time to learn the basics. It'll be well worth it, I promise you.
There you have it, from someone who came from the other side.
Absolutely. I mean, I've been down a rabbit hole with pretty much anything. You name it. It could be simple iron condors, verticals, butterflies. I still actually love doing butterflies. Actually, I do a lot of broken wing butterflies, but that's on special occasions and for various reasons. But when it comes to doing things like diagonals, multi-legged diagonals, where the expirations are different, you have to understand how one's going to perform over the span of 2 or 3 days, depending on when you open it up, versus just doing something that expires on the same exact day. So when your legs expire the same exact day, it's a lot easier to know what's going to happen versus doing a multi-legged diagonal spread where the expirations are going to be different, and it's a different animal. It is, and it does take a little bit of work to understand it, but once you do, man, you just don't look at options the same way.
Yeah, yeah. I'll tell you one thing I learned, because you got to understand the option matrix did not exist before I had it put into TradePartner. I didn't know exactly what I was going to get. All I knew is that this is information that I need as an option spread trader. And one thing that I learned very quickly when I started looking and analyzing it, at these option matrices, is that on a lot of these spreads that are very standard that people have you holding on until the last day, you should not hold on until the last day.
No.
I realized, because of the information that the matrix gave me, that you are way better off getting out of the trades a day early for on a lot of different types of strategies, for various number of reasons that, again, I'll go into much more detail on the one-day workshop. But it's fascinating what you learn from the option spread matrix that is only in TradePartner, yours for free. So
Is it
all right,
matrices or is it
yeah.
matrices? Or
you know what? That's a good question. That's a
wondering
good
if it's
question.
matrices. Anybody knows, let us know.
There you go.
Is she the grammar
There you go.
nerd?
Yeah,
Right.
certainly.
Yes, you know me,
probably,
Spring. Oh man.
we probably have
That'd be
some
cool.
English teachers out there somewhere
Right.
that are
Ben
like,
could
oh, we
compare.
cannot listen to you
Success.
I
anymore.
think it's matrices. I'm gonna go with matrices on that one.
I think you might be right.
I
I
think
think you
so.
might be right.
All I know is when I first looked at those matrices and watched Ryan's video, I'm like, what are you talking about, dude? To Ryan and Ben's point, and I'm like, I watched it again and again, and I'm like, and then it kind of sunk in. But what's really weird is I was talking to somebody about this, about some other stuff that I do, is in anything we do in life, whatever it is, we get this what's called procedural memory,
Mhm.
and it just becomes second nature. So to Ryan and Ben's point, they really are into it, and so they can do it in their sleep. Is that a good comment? But
Oh,
at
When you
first you're
absolutely.
see
like,
it, you
what the
can't
heck
unsee
is
it.
this?
When you see it, you can't unsee it.
You
That is
can't.
very
And they're
true.
like, why can't you see it? I see it so clearly.
You know what's a really interesting thing too. A lot of my tile members might be able to attest to this as well. If we get into a particular spread, there's times where I'll tell them we need to take profits now, and that's because I'm seeing it on the matrix that if we go anything higher than a certain amount, then we're just holding on to our hedge, and at that point, it's not going to make any sense. And the only way you can see that is if you pull up, obviously, whatever spread in question, it'll be a bullish in this example if after a certain mark, depending on how many days we have left till expiration and that sort of thing, after a certain mark, you'll literally see whether it's a dead zone or whether there's an area where you're holding too many shorts that you're just going to lose money if the market moves any higher. So,
Hey, what's a dead zone,
Yeah.
Ben?
Oh,
oh,
no.
that's right.
No,
You
no,
know
no, no,
what?
no.
We'll get
No,
into
no.
that
Forget
another
our
day.
lingo.
That's right.
We're not going to
more
start that
another
one
day.
today. No,
That's
no, no.
right.
However,
Noted.
in the next podcast, as I mentioned earlier, we're going to be focusing on Ben's trade of the week. And he's had just a spectacular track record. 300 and something percent this year, right?
Actually, I don't know I think that's since inception.
Since inception.
Yes.
What
And you
amount
can
did you
do that
start
with a
with this year?
pretty, you don't
For
have to have a
this
huge
year.
margin account, right, Ben?
No.
I'm sorry?
You don't have to have a humongous margin account, do you?
No. So that's one of the things I'll always remind anyone coming aboard. You don't need a huge account, but
Yep.
if you do want to compound, and I mention this often, is that we use an aggressive compounding schedule. So, if you're using 5 grand to do it, and I will give people their own custom, if they want to follow it, I'll give them their own custom, a little bit more conservative compounding schedule, but we do use a pretty low delta on
Okay.
there. So the compounding, and it may not make sense to some of you guys of what I'm saying, just know that we compound fairly aggressively on the towel. And the reason being, you just go on, be in to make that money. If you're in it to win it, then you give yourself that opportunity to
Yeah.
make some more money. So
Yeah. So my whole point in that is you can take a small account. Some of you all that are on here probably have a small account, or have a small account you could risk. You don't need a ton of money. Is my point. But you can take a
there's a
small account and
non-compounding.
potentially grow it to a larger account
Yeah, there's a
over time.
non-compounding section there that I have strictly for profits in terms of zero compounding if you chose to go that route, which I would never recommend. But if you did, it's there. It's there.
Yeah, we're going to need to spend maybe that'll be the following podcast as we spend a good majority of the time on the power of compounding, and we're not talking about normal compounding. Again, I approach it differently. So
and you see it in work on Ben's towel because
exactly.
it's remarkable to see. If you weren't compounding, you would have made not even 2 grand, I think, for the whole year.
Actually,
And
yeah. No, good. Yeah.
Which is an awesome return.
So
compounding,
well,
it's
but
it's
you gotta
at
understand.
28 grand.
So even that, it's really good because you only need like 5 grand, right?
Yeah. Even
Right.
if
So-
it made 2 grand,
so
making
2 grand.
40%,
Yeah.
maybe 40% isn't it? That's super performance.
Yeah, that is
40% a
tremendous.
year is super
Right.
performance.
Tremendous. And so you
But
add compounding to that.
Yeah.
To Spring's point, and not that
In
she has
real
very
life.
many, but
Yeah, in real life with real money. Yeah.
I had to get something in there, Spring. You've
just
been
saying,
pounding me the
like
whole
if I
stinking.
I'm just saying, if I had the choice
Give her the
between
business.
2 grand and 20 grand, which one am I gonna choose?
Exactly. If you're going to do the trades, you might as well do it in a way that's going to maximize your profits.
Yep.
Swing for the fences, guys.
Yeah.
You know what's always best? Take a small amount that you're willing to part with in life and just go for it.
Yep.
You got way more to lose if you don't.
Exactly. The risk is not doing it.
Mm-hmm.
I mean, quite frankly. So Absolutely. I often ask, when people are talking about compounding and, well, what if, you get to a certain lot size? What if you get to, let's say you grow a $25,000 account to 250,000. So you multiply by 10, right? 250,000. Well, you're trading a large lot size, and you're like, if it goes into a normal drawdown, you might give away $50,000, and you're like, I just don't know if I can do that. And so I always ask them, well, would you rather at the end of that drawdown have $35,000 in your account or $200,000 in your account?
Right.
Because that's what you're looking at. The drawdown's coming no matter what. Yeah, it's going to be bigger with the compounding, but your account is going to be so much higher.
Yep.
So
It's money you didn't have still.
everything that I do is in some way, shape, or fashion related to compounding, including my hedging, which I'll talk about in the hedging webinar on Thursdays too.
And I'm sure we'll touch upon it at some point as well. There are good instances where fixed fractional could
Correct.
make sense. Fixed ratio
50%
is
Kelly.
what was that?
No. No 50% Kelly.
Come on. No, but so this is an interesting conversation on this. So what I was trying to say with like 40% is once somebody gets to a certain amount of capital, like that they're comfortable with, 40% is a really good yield on an annualized basis when they have a very large account. Because for me, when I trade real and large capital, I have like an emotional kind of human tie to it. So I know that I have not consistently compounded like larger amounts of capital. So everybody's a little different, if that makes sense. So I don't know. There gets to be where there's a law of diminishing returns once you get to a certain capital standpoint with strategies.
Yes.
So like what
Yeah,
Ben's doing it, you probably couldn't compound $10 million account.
Not in the same way. No, you
So it just
absolutely
starts
not.
to.
How many zeros can you handle the red on the day that you actually have a drawdown? That's the point.
Yeah.
And that's the thing. That's
Yeah.
why some of these people, why some people can't believe it, is because you can't do this on a $10 million account. You can't do this on a $20 million account. The market's just not there.
Mhm.
But you, as an individual, you can do it, and it's meaningful. So, yeah, we encourage everybody focus on the compounding. Focus on the compounding. It's something that takes you outside of what the institutions can do.
Right.
And increases the overall edge, quite frankly, that you're going to need, by the way. So, but Ben's trade of the week, we're going to dive into that in more detail in the next podcast, and then maybe the following we'll kind of dive a little bit more into the compounding and probably reference Ben's stuff from that. So. All right, guys, we are past the time, so we're going to sign off. And I'm going to spend the next week thinking of some zingers that I can throw back at my daughter because she's brutal. So
it doesn't even take me half a minute. So
Dang, look at it. She's just chopping your knees off. Man.
All right. Okay. So listen. I have to be careful because if I just throw them out, she'll start crying.
Mm-hmm.
So,
mm-hmm. And then
women,
what are we left with?
what can we do with all of our hormones?
No, it's not the women.
Man.
It's not the woman thing.
Got to hold his punches, man. He's got to hold his punches. That's it.
It's not the woman thing. It's the father-daughter relationship. See, you view what I think of you in such a high degree.
I'm glad you think that. If that helps you sleep.
See what I mean, guys?
Right? I know.
I mean, seriously.
I got to work with her. I mean, geez.
Yeah, Ben gets it from me too all the time.
I honestly cannot be as mean as she is. I cannot be as mean as she is. I cannot be as mean as you.
I must have gotten it from your wife. So I
think that's a good guest we
zingers
could bring on.
You what?
I think that might be a good guest we could bring on.
Oh,
5 minutes about Ryan
No,
from Mrs. Jones.
No, everybody knows enough about me already. So I want to bring my wife on.
Oh, that would
then
be very
it would-
good.
It'd get extra hooligan because me and her together are just straight hooligans.
Yeah, they
And
are.
Ryan's got to stay
now you
muted.
just sealed it.
Permanent
Now you have
mute
to
for
be
10
Yeah.
minutes.
Yeah, no, I you got to have pretty thick skin to be in this family.
and our goal is to shock Ryan.
True story, and they do an excellent job of it.
Yes, we do.
All right,
Ben, I have a
enough.
serious question before we go.
Yeah.
Sure.
OU or Tennessee Saturday?
No,
Boomer
Chad.
Sooner. Boomer Sooner. I'm
In
not
case
unloyal
you guys
like
might have
Ryan.
noticed, college football isn't for me. Neither is soccer.
Ugh,
So neither is of main interest. So we'll leave it at that.
Ben.
All right, there you go.
where's your joy?
Professional sports. There we go.
Oh, that's even worse.
College
Anyways, OU's
football.
gonna win.
They
Ryan's
could.
loyal to OU anymore.
It's
So
not, it
he's a
has nothing to
disgrace.
do with loyalty.
It
That's to do
is.
with reality.
No,
They're
you
just
bet
the
10
the
points
Sooners are
against
just not.
OU.
And did I win?
That's the point.
Ole Miss.
You're just going to win.
Ole Miss.
What are you?
Tennessee's going to beat them too. I hate to tell you.
Who? Do y'all have one or two losses?
Where's
Ryan?
you're the
We have
reason
two
we're losing.
losses.
Okay.
We have two losses.
So if we lose, Tennessee loses, or OU loses, we're likely out of playoff talks, right?
Okay, wait.
Oh, we're already done. We're already
If
done.
OU
Oh,
wins,
Uh-huh.
if OU wins,
Uh-huh.
Ryan has to wear his Texas shirt on the next podcast. So he made a bet
Why would you
with our
do that?
cousin.
Why would you do that? I would no. If
What about
OU
Baylor?
wins- no,
For Brandon.
no.
Oh, he does
We're
love
not
it's
doing
a
that,
different
guys. No,
they're a
no,
different
no.
conference.
I don't even know why you're talking. I don't even know why you're talking right now because
I'm just
that's not
saying,
happening.
like if you're not gonna
I'm
vote
just-
for
I'm
OU,
being
there better
real-
be consequences for your lack of loyalty.
I've analyzed the statistics, and I'm telling you, OU is not going to win Saturday. I want
You know
them
what?
to. I hope they do, but they're not gonna.
I don't
All
know.
right, guys.
I believe in miracles.
We're going to find out next week. Everyone have a great day.
Take care, everybody. Bye.